A video game retailer just offered to buy one of the biggest e-commerce companies in the world. GameStop wants eBay for $56 billion. That is not a typo. The company that sells used games at the mall wants to swallow the company where you bid on vintage sneakers and old electronics. Let me put this in perspective. GameStop is worth about $15 billion right now. eBay is worth over $30 billion. The student is trying to buy the teacher, and the person behind this idea is Ryan Cohen, the same guy who turned GameStop into a meme stock legend back in 2021. Now, here is what actually happened. On May 4th, GameStop sent a letter to eBay's board offering to buy the company for $56 billion in stock. That is a premium of about 80% over where eBay was trading. The offer says GameStop would issue new shares to pay for the deal, which means they are not using cash. They are using their own stock as currency. Why does this matter to you? Because this is not just a weird headline. It tells you something about the market right now. When a company that was left for dead 5 years ago can offer to buy a tech giant, something strange is happening to stock prices. Let me break down the numbers. GameStop made this offer at a share price that values the company much higher than where it trades today. According to the Wall Street Journal on May 4th, the bid implies a GameStop share price of around $115 to $125. The stock was trading closer to $60 when the news broke. That gap tells you this deal is more of a wish than a signed contract. eBay's stock jumped on the news. Reuters reported shares rose about 8% in early trading. But here is the catch. Most analysts think this deal will not happen. eBay has not said yes. GameStop does not have $56 billion in cash, and issuing that many new shares would dilute existing GameStop investors by a massive amount. So, why would Ryan Cohen even try? Because GameStop has a problem. Their core business, selling video games at retail stores, is shrinking. People download games now. They do not drive to the mall. Cohen has been trying to turn GameStop into something else, an e-commerce player, a tech company, anything but a dying retailer. Buying eBay would give them a real online marketplace with real revenue. But here is the thing you need to understand. This is not how normal mergers work. Usually, a bigger company buys a smaller one. Usually, the buyer has cash or can borrow it. GameStop is trying to use its own stock, which is volatile and meme-driven, to pay for a company twice its size. That is like trying to buy a house with lottery tickets. What should you do with this information? 3 things. First, do not chase the hype. GameStop's stock will be volatile. eBay stock might pop and then drop. If you own either one, watch the headlines, but do not make emotional trades. Second, remember that meme stocks are not investments. They are bets. Sometimes they pay off. Most of the time, they do not. Third, ask yourself what this says about the broader market. When companies can use inflated stock as currency to buy real businesses, you might be seeing signs of a bubble. The last time GameStop made headlines like this was January 2021. That was when retail traders on Reddit drove the stock from $20 to $480 in 2 weeks. Some people made life-changing money. Others lost everything buying at the top. This new chapter is different. It is not about short squeezes. It is about a company trying to reinvent itself with someone else's money. Here is the bottom line. GameStop wants to buy eBay. eBay has not said yes. The math is fuzzy. The stock prices are all over the place, and the whole thing might fall apart next week. But the fact that this offer even exists tells you the market is in a strange place. When meme stocks try to become real companies, pay attention. Not because you should buy, because you should understand what is happening to your money. If you want more breakdowns like this, hit subscribe. I will keep watching this story and let you know if eBay actually says yes.